Hey, welcome back, my fellow investors. This is me, E.T. And remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who's always looked for ways to increase one's financial literacy, net worth, and doggone cash flow. Now, today's video, I'm going to talk about inflation. All right, guys, inflation is here. No ifs, ands, or buts about it. We just got the news that guess what? 6.8%. How long is it going to be here? I have no idea. None whatsoever. You know, initially they tried to come out and say it's going to be transitory. I am not an economist. Never claimed to be, never went to school for it or anything. But when I heard that, I do have common sense. And when I heard that, I was like, they're blowing smoke. And now they come back and say it's not. Come on now. Think about it. You're going to pump $8 trillion into our economy in a matter of 2 years. We've got a national debt that is over $29 trillion and growing that we'll probably never pay off. Yes, we had the issue with the supply chain. But the bottom line is this here. You are not going to be able to pump that much money into an economy and expect to control inflation. Interest rates are at an all-time low. Inflation is here. They didn't let that doggone genie out of the doggone bottle. Now, how do we deal with it? We can't. Realistically, you can have all the trust in the world in the people in D.C., but I personally don't. The only way that I'm going to be able to deal with it, and the only way that any working American out there is going to be able to deal with it, is deal with it the same way the rich deal with it, that's what we're going to talk about. Think about it. We went from normally about a 2 to 3% inflation rate, and all of a sudden it hit 6.2, now 6.8. Wow. 6.8 is the highest it's been in over 40 years. I'm 59 years old. So I do remember some of that high inflations of the 70s. I do remember having a bank account at a savings and loan and making damn near over 10 and 11% interest on my money. But also back then, you were talking about interest rates on homes, 16 to 20%. And guess what, guys? Inflation now is starting to rear its ugly head. So it's time for us now to get our money right. A lot of you are young that you don't remember that, but I'm telling you now, it's the time to get our money right. I made some notes here, so I'm going to refer back to the notes. So one of the first things I think that we need to do in order to get our money right is we really need to understand the impact of inflation. Here are some inflation facts. We already know that inflation is nothing more than the price of goods and services that are going up. But also it's the value of a dollar goes down during inflation. You're going to need more money in order to live. And taxes are going to go up. I don't care what you say. You can tax the rich all you want, but the bottom line, eventually everybody's going to feel that pain of increased taxes. And if nothing else, look at it from this perspective here. Inflation is a tax. If you're paying more for goods and services, that means you're paying more in taxes. Think about it. You know, all your various types of taxes. You got your city taxes, state taxes, and federal taxes. On items, goods, and services, if you're paying more for that good, that basically means you're going to be paying more in sales taxes. Well, who gets the sales tax? So it is a tax. Inflation is also a tax. More goes out of your pocket. But think about it. As more is going out of your pocket, it's going into the pockets of businesses and the government. Follow that, as they say, follow the money trail. Follow that money trail. Where does it end up? Out of your pocket, increased prices, more money's coming out of your pocket, going into businesses, going to the government. But also keep this in mind. The price of products, goods, and services are going up, but also the price of assets and that's key, assets are going up. Assets are a hedge when it comes to inflation for the asset owners. And if you're not an owner of assets, you have nothing to hedge. You're going to feel the full blunt of inflation. Now, when I say assets, assets like real estate, stocks, cryptos, owning a business. And what I always tell people, you know what, and I heard this from the Wall Street Trapper. He says, if you can't start a multi-billion-dollar business, one of the things you can do is you're going to own a multi-million-dollar business by way of the stock market. So just to summarize that little rant that I went on, this is it. As the value of money goes down, the value of assets goes up. Goes back to what I said earlier, is that the way we deal with inflation is deal with the same way that the rich do. And that is through ownership of assets. So what's the point? The only way to benefit from inflation is by owning assets. If you don't own assets, start accumulating your assets. You can start with stocks, possibly get into real estate, possibly open up a business, home-based business. But here's a plan on how to handle business. So here's a plan on how to handle inflation. I've already said buy assets. Also, don't buy a liability. Don't go into debt. Don't buy a liability unless you have an asset to pay for it. Period. It's all right to go, if you got an asset that's going to pay for that liability, you're not paying for it. Keep that in mind. Take advantage of the government incentives, investment incentives. And what I'm talking about there, you've got 401k, you've got the Roth IRA. If you qualify for a Roth, you need to take advantage of it and try to max that out every year. If you have a company 401k, are you maxing it out up to at least the match? Do the match with your 401k and then put the rest of that money into your Roth IRA. Once you max out your Roth IRA, if you still have money to invest, go back and then start putting more money back into that 401k. But take advantage of them. It's there for us. A lot of people are not taking advantage of those government investment incentives. Remember, all most people have nowadays is Social Security. So you're gonna have to really invest for your own retirement. Take advantage of it. Bottom line, pay your credit card balance off every month. Do not carry a credit card. If you're carrying a credit card balance, that basically means you can't afford what you just put on that credit card. Simple as that. That's basically what it means. Why pay 16 to 20% interest on an item that you paid for? That's just like increasing the price. You already got inflation. Think about it from this perspective here. If inflation went up 6.8% and you use a credit card to buy goods and services and you don't pay that credit card off, if your credit card has a interest of 16 to 20%, you better add at least 6.8% to that, because that's what you just did. Inflation, 6.8%. Everything is higher, at least 6.8% higher. You're using your credit card to buy those services that are 6.8% higher, and then you don't pay it off, and you end up paying 16 to 20% interest on that. No, stop it. We need to stop and pay it. If you got a credit card and you can pay it off every month, that means you can afford it. And realistically, if you want to really see if you can afford it, use that just three things principle. If you can't buy it 5 times, you can't afford it 1 time. Okay, I like that one too. The bottom line with all of this is this here. We must start, continue to practice. If we haven't done it, we need to start. And if you're doing it, we need to continue practicing good financial management and wealth building. Bottom line, that's how we handle inflation. Guys, if you got something out of this video, do me a favor, hit that like, subscribe, and notification button. With all that being said, guys, I will see you in the next video. But also remember, save, invest, apply what you know, because knowledge is not power. It's the application of knowledge is power. Guys, I'll see you in the next video. Take care. Bye-bye.